Hey, thanks for joining us for another Spirecast. At Spire, one of the things we want to do is just continue to bring practical resources. Our lives as pastors are complicated enough. As ministry leaders, there's all kinds of challenges. Most of them have to do with people, obviously. And then you throw in things like a pandemic and crisis and war and inflation and divisive politics. And your job just is not an easy job. And we get that. And so, one of the things we want to try to do are provide some shortcuts, some tools, some resources, some things that will be useful to you. And when we talk about pastor health and resiliency, it's a big deal issue. The stats aren't great, and we know that there's plenty of challenges. But part of that health and resiliency is not just emotional health, it's not our spiritual health alone. It has to do with our physical health, our financial health. And today we want to talk about some financial health issues. We have a great privilege of partnering with a number of folks. And one of the things that we want to invite you to is next Wednesday, we're going to talk about some health insurance benefits, some ways that you, as an employee who by the government is treated as self-employed, might be able to benefit from some of the strategies that Remodel Health has. And so next Wednesday at 11 o'clock Eastern, 10 o'clock Central, 8 Pacific, the Spirecast will be presenting some things through Remodel Health, and we'd love to have you join us. Today, we're going to be talking to one of our key partners and great friends of Spire, me personally, our church at LifeBridge, Clergy Advantage. They've been a longtime sponsor of so many things in and among independent churches, and we've been a benefit of that. They're going to be with us again in Orlando in September. Hope you're going to be at the conference and you get information about that. But personally for me, I've been using Clergy Advantage, both their tax support side, we're in tax season, and their long-term strategies around retirement and benefit from that. And over 30 years now. And here's what I say to all my ministry friends. If you're not using Clergy Advantage, you're leaving some money on the table, both in how much tax you're paying and in the future benefits as it relates to housing allowance and your retirement. And so we're going to watch a video resource from them that's about tax-free money for pastors. Really practical, really useful. You'll love the folks over there and what they do. And then afterwards, any questions you have, if you'll text those in, go on the Spire app. We're going to be answering those questions there. And they're going to be live in doing that for us and providing those answers throughout this week. So looking forward to this. Watch this, tax-free money for pastors.
Hello, and welcome to Clergy Advantage and Tax-Free Money for Ministers. Whether you're new to ministry or a longtime veteran, we think you're going to be very pleased with what we have to tell you today. There's a lot of confusion and myth about ministers' tax rules. That's mainly because your tax situation is so different from the normal or secular employee. So today, we're going to set the record straight and help you understand your taxes and your advantages. These simple principles will transform how you look at your finances and future.
Now, it's important to mention that nothing we share today is speculation. Our team of 12 clergy tax experts includes CPAs and enrolled agents who are federally licensed by the Department of Treasury to represent taxpayers in any kind of IRS proceeding. They've represented more than 1,500 ministers in IRS examinations all over the country. From our 45 years of experience and research, we've learned that the strategies and information we tell our clients passes the real litmus test in tax law. These are solid applications and strategies that held up under IRS scrutiny.
To make all this easier to remember, we've categorized your major tax advantages into 3 areas: housing allowance, an accountable plan for ministry expenses, and minister's retirement. If you maximize these 3 areas, you'll have a foundational tax strategy that will give you the best tax savings over the course of your career. You can even preserve your housing allowance benefits for life with the right planning.
So before we dive into those wonderful tax benefits, let's start with Who actually qualifies for ministry tax status? You need to satisfy these 4 guidelines to qualify. The first is that you must be ordained, licensed, or commissioned. It's a myth that a minister must be ordained. One of those 3 designations is necessary if you're part of a denomination. The criteria are set for you by your denomination. However, if you're an independent or non-denominational church, your church can decide who qualifies based on how they interpret the IRS guidelines according to their overall philosophy. Surprisingly, there's more room for interpretation than most people realize. We often find that a church's criterion is even more stringent than the actual IRS code.
The second guideline is that the church must set a written criterion. So decide your criteria, apply it evenly to all candidates, and put it in writing in official church documents like a minute resolution. This resolution does the formality of ordaining, licensing, or commissioning a minister. Next, a minister should be considered eligible to perform the sacerdotal functions of the church. That's an antiquated term that comes from the word sacrament. It simply means marrying, burying, communion, praying for the sick and needy, etc.
And finally, an important element for the courts and the IRS is that the minister must be eligible to be engaged in the conduct of worship. That doesn't mean you have to be on stage or behind a pulpit every service, or even frequently, but just considered eligible. Once that is determined and met, get a minister's certificate. It actually isn't a requirement, but in our experience, it helps if your tax status is ever challenged. So we recommend that you get one.
So now that you're officially recognized by the IRS as a minister, there are 4 tax rules that are unique to you. These can actually be advantages with a number of strategies associated with each that we'll explain in more detail later. The first rule is that you have dual employment status. That means ministers really wear 2 hats. They are considered a common law employee for purposes of wages, receiving a W-2 form, and even for labor disputes. However, ministers are considered self-employed for calculating Social Security tax. So ministers pay self-employment Social Security tax, which means you're responsible for both halves of the Social Security tax. Next, there's no mandatory withholding for ministers' taxes. It's confusing to many administrators, but churches are not required to withhold FICA or Social Security tax for ministers. If both the minister and the church agree, the church can do the withholding as a convenience. We recommend that they do so, but keep in mind that the minister is the one who's responsible for their taxes, not the church. Now, a third peculiarity is that ministers are eligible for exemption from Social Security tax and benefits on their ministry income. Opting out of Social Security is a very important financial decision. This decision requires forethought and planning, so we offer a separate free video on our website and a free consultation if you are considering it. We don't want to convince anyone to go one way or the other, but you need to make an informed decision. There are also deadlines for opting out and no extensions are allowed. So we won't go into all of the issues here, but do find Social Security and the minister in our video resources for details.
And then, lastly, there's the minister's housing allowance exclusion, your #1 clergy advantage and probably the most well-known benefit for ministers, and rightly so, because it's so valuable and offers so many opportunities. At the same time, housing allowance benefits are often misunderstood or applied inadequately, causing many ministers to miss out on tax savings. We'll clear a lot of that up in the next few minutes, but first I'd like to introduce you to Steve Merriman, Clergy Advantage founder and president, also known as Mr. Housing Allowance, and I'll let him explain why.
We have been preparing tax returns since 1977 for ministers, and during that period we have represented over 1,500 ministers in IRS audits, and we were intimately involved in the landmark tax court case involving Rick Warren. that forced us to exhaustively research everything that was ever legislative or written, commentary, everything on the clergy housing allowance. As a result, at the end of that tax court case, we amassed a tremendous amount of knowledge, and that was our building block for many of the strategies that we use today to help you in your taxes and your retirement planning. If I could offer one piece of advice to you ministers, it would be to use a tax and retirement planning advisor that specializes in your extraordinarily unique situation. We at Clergy Advantage not only feel called to helping you in your taxes and retirement planning, we spend every waking moment looking at new tax legislation and existing tax legislation from the lens of how will that help you as a minister.
So out of all that research and congressional rulings, one thing is clear. The overarching guideline to your housing allowance exclusion is that it's the intent of Congress that ministers not pay taxes on expenses involved in running and providing a home. Let's talk about the Minister's Advantage #1, housing allowance.
The first thing to remember is that housing allowance benefits only apply to ministry income. So if you're bivocational, you can only claim housing allowance on your ministry income. Secondly, your deductions are limited to the amount that the church designates as housing allowance. The regulations also say it has to be an official designation. Unfortunately, they don't really explain what that means. We recommend that your housing designation be done in advance every year with a minute resolution. Adding this sentence to your resolution can cover oversight or time lapses where you may otherwise not be officially covered. This resolution shall remain in effect until revoked or amended. So pick a regular time annually and designate the housing allowance for the upcoming year. If circumstances change, you can amend that housing allowance for unexpected costs or repairs.
However, it's easier if you just estimate your cost high and add any extra or unused portion back into your income at the end of the year. It's quite a standard practice to do that. We're often asked if the church sets housing allowance too high. Are they liable for anything? The answer is no. The IRS says that the church only has two responsibilities in this area. Number one is to properly designate it. Responsibility number two is to exclude that designated amount from the wages reported on the W-2 form. And that's it. Also, there are no limits to the percentage of your income that you can designate for your primary home. Your deductions are limited by the lesser amount of what you actually spend on housing costs or what is designated. It's often appropriate and beneficial to set 100% of your income as housing allowance when the situation warrants it, as with part-time ministry employment.
Keep in mind that the main limitation is that you cannot claim more than you actually spend on housing costs or more than has been designated. For example, if you spent $30,000 for the year, but the church designated only $24,000 for your housing allowance, you're limited to the lower of the four items we just mentioned. You can only claim $24,000 even though you spent $30,000. In this case, you've lost $6,000 of deductions. Conversely, if the church designates $36,000 and you spent only $30,000, you have $6,000 left over. That's no problem. You got your full deduction and we simply add the $6,000 back into your income and call it unused housing allowance. That just means you took advantage of everything that you spent on housing. Now, the fair rental value of a house is another area of confusion. Fair rental value includes the rental value of the empty house plus the rental value of the furnishings plus the utilities. In most cases, ministers and church boards spend way too much time trying to figure this out. In our experience, this limitation rarely comes into play. Where it's generally relevant is in an unusual year when you buy a home, pay a large down payment, remodel, or have a huge repair bill. But in the vast majority of cases, You shouldn't need to worry about it. If you think it may be relevant to you, give us a call and we'll help you sort it out.
Okay, the next big question is, so what can you deduct? There are 4 categories of deductible housing expenses. The first one is expenses involved in running and providing a home. The second is utilities. The third is the purchase cost of a home. Then an odd one called appurtenances thereof, which means outdoor structures like sheds, garages, gazebos, swimming pools, etc. This also includes art, decorations for the home, TVs, entertainment systems, and of course furniture and appliances. You can also claim cleaning supplies and services. And then, along with your utilities, always include landscaping services, lawnmowers, shrubbery, and all things related to maintenance of the exterior, including outdoor structures. As a rule of thumb, we tell our clients, think fixtures and furniture for expenses. With that in mind, here's a little quiz. Which musical instrument can you deduct? A piano, or a guitar, or both? The answer is the guitar is not deductible because it's portable. It's not a fixture. A piano, on the other hand, is, and so it's deductible. A big surprise for many is that a minister can deduct costs for the purchase of a home, including the down payment. Keep in mind it's still subject to the 4 limitations that we discussed before. There are a lot of strategies we use to help maximize deductions on a major purchase like that. Just run it by us before you buy so we can help make the most of the opportunity. This is often overlooked and can be extremely valuable. Many times, we can even help a minister save taxes over a period of years in the connection of planning for the purchase of a home.
So now is your advantage number 2, an accountable plan for ministry expenses. Before you speed past this part, it sounds a lot worse than it is. And now it's about the only way for most ministers to receive any tax benefit from their ministry expenses. Since the last tax reform, itemized deductions or employee business expenses can no longer be deducted on a tax return. So if you're a typical minister in a small church or on a small staff, this could save you upwards of $2,000 to $3,000 every year just by rearranging your pay structure and creating an appropriate plan. An accountable plan applies to all businesses, not just ministers, and is the standard way to handle your business expenses so you're not paying church-related expenses out of pocket. If set up properly, it provides a tax-free fringe benefit that gives a minister state, federal, and Social Security tax reductions. And for ministers in Social Security, that's a 15% reduction right off the top, even if you pay no state or federal tax. It takes a one-time agreement with your employing organization, doesn't cost you or them anything extra, and is basically restructuring your existing pay package. Our step-by-step video instructions and guide with sample documents will help you understand the concept and details if you're interested in learning more.
Now, the greatest tax advantage that a minister has is proper retirement planning. Ministers need to totally rethink the concept of retirement. That's because you can do things in retirement planning that no one else can. Let me start by saying that the importance of the right kind of clergy retirement plan with the right kind of clergy-specific planning cannot be overstated. Almost nothing about traditional retirement plans or traditional retirement planning strategies is adequate for you. The most important thing we could ever tell you about retirement planning is that you can keep housing allowance distributions for life, whether you separate service, plan to retire, or go into another career or ministry. But you need either a denominational plan or a clergy-specific 403B, like the Clergy Advantage plan, with proper planning. Many of our clients never intend to actually retire. They move into careers and ministries at the end of their formal service. That's why we consider retirement planning for ministers, planning for financial independence. This is where the whole concept of tax-free money for life really gets good. With a Clergy 403B, you'll also save Social Security tax now on contributions and later on the distributions. For most ministers, that's a savings in 6 figures over the span of their careers. Don't take our word for it. You can use the Minister's Retirement Calculator on our website to see the real difference. Just plug in your numbers and look at the tax savings.
Now, you should also know that clergy-specific 403B plans are very different from the ones that schools and hospitals use. Many well-meaning financial planners will suggest using other types of retirement plans that are good for secular employees because they don't fully understand your tax benefits. Let us go on the record right now as saying that it's extremely rare that a minister should ever use a regular IRA. And there is no scenario where you should use a SEP, a simple, or a 401k. If you have one of these plans, we can still help you get it right so that you keep your full benefits and your housing allowance intact. You can find a chart on our website that will compare the benefits of each type of plan, and you'll clearly see the superiority of a clergy retirement option. With that said, a Roth option is advantageous in some cases, or if you don't pay any state or federal tax. The withdrawals can usually be tax-free. We do occasionally use a Roth option inside the 403B and have many strategies where a Roth can be a useful supplement to your overall financial plan, but rarely the primary choice for a minister's retirement. When ministers leave their employer or leave the ministry altogether, they're typically told to roll the money into their retirement plan into an IRA or some other secular plan. This means that they forfeit their tax-free distributions and housing allowance. So we designed the Clergy Advantage 403B plan so that it would be portable and maintain the participants' housing allowance for life, no matter where they go.
And if you're a minister working outside of a church in a 501c3 organization, such as a Bible school or religious organization, this plan has been structured to allow you exactly the same features and benefits too.
The most important thing as you approach retirement from a tax point of view is to answer this question: do you have enough money in the right kind of retirement account? For a minister, the right kind of retirement account is one that will pay out tax-free housing allowance throughout the retirement years. There are 2 places where you can have that kind of account. One is with a denominational retirement plan, and the other is with a Clergy Advantage 403B account. Those are vitally important, and it's also important that you have the right amount of money in that account. You want to have enough to last you throughout your retirement years. If you find that you do not have enough money in your clergy retirement account, there are various strategies to boost the amount that's in the account, both by taking it from other retirement accounts and by using non-qualified funds in order to defer additional dollars into those clergy accounts.
Only a clergy-specific retirement plan can do all this. And one of the best options for a minister is the Clergy Advantage 403B. Some of our denominational clients use their plan with the Clergy Advantage 403B for additional diversification. The Clergy Advantage plan has no setup fees or administrative fees, and no withdrawal fees or fees to move from fund to fund or account to account.
So, the really important points we want to leave you with today are that ministers can reduce state, federal, and Social Security tax with contributions to a clergy-specific 403B. Grow that money tax-free, and then withdraw it tax-free as housing allowance distributions with proper planning, even if you leave the church or are not in the ministry at the time of retirement.
Don't underestimate your retirement planning opportunities. There is so much available to you that we simply can't discuss it all here. Our Wharton School of Business certified retirement specialists are excited to help you get on the road to financial independence with tax-free income for life. Thank you.
Hey, Hey, thanks again for joining us today. I really appreciate it. Hope that was useful and helpful to you. If you have any questions, go ahead and send those in. Put them on the chat room here, and then those will show up also on the Spire app. We want to make sure that those are being answered, and Clergy Advantage is monitoring that. We'll be responding to those. So look forward to that. Don't forget next week with Remodel about health insurance. Again, practical way for us to help. We're glad you're here. Love what you do. Pray for you often. God bless you.